are back for another Talk About It Tuesday. And today's going to be a catch up day because I have a stack of questions piled up and I don't want these questions to linger too long and people be upset with me. So, what I'm going to do is give really brief and concise answers that I think will be very usable and useful to you, but they will address the question in a short manner. So, let's just jump right in. The first question is, how can information from the city planner's office be helpful in real estate purchases? Well, my philosophy is you should never do any real estate investment without checking with the city planner's office. So what is the city planner's office? Every government agency, whether you're talking about the most local to state to federal, has an outlook in terms of what it plans to do and how it plans to allocate resources and funds to particular sections of its municipality, right? So in a city, it will tell you that infrastructure plans might be happening where they're going to replace pipes or gas lines or, there's a major project to bring in Wi-Fi in a certain area. It might tell you transportation lines are going to be extended to a certain area, or transportation lines will be cut off in a certain area. It will tell you if demolition is going to happen. It will tell you if the city plans to sell off major parts to developers. It'll tell you if a stadium is coming in. It'll tell you so much information that is so valuable and useful to you that you should never avoid looking at city planners. So again, it's usually a 10-year outlook, but it's also broken down into smaller parts. So you'll know, is this a buy and hold strategy where there's going to be long-term economic value because of what the city is planning? It'll tell you whether it's a great buy and flip opportunity. Should I buy now because something coming in and I can flip it and make major money from it? So do not avoid. I don't care if you think it's a gold mine in your head. If you have not looked at what the city is planning to do, you could be buying a big dud, or you could be sitting on a gold mine and not know it. So you can't avoid it. If you're going to be a serious investor, always check with your city planning agency to find out what's going on. So that's question one. The next question we're going to tackle is, how do you lose the victim mentality and create a life full of overflowing abundance through creation of mindset? Anybody that knows me knows that I am big on mindset as a start, meaning you have to have what in psychology they call locus of control, right? When you believe that you have the power to be able to dictate what happens in your life, as opposed to all the outside influences having more control over you, then that's the start, right? So you have to believe you have the ability to do it. You have to believe that there's a pathway for you to do it. You have to believe that you have the ability to make the right connections and gather the right resources to do it. No one can change your mind, right? You can look at other positive examples. You can be around people who are supportive. You can be around people who will educate you and guide you. You can be around people who have been doing it for a long time, but you still have to turn this internal switch and say, I can do that too. And when you can do that, there is no limit to what you can accomplish. There is no limit to the lifestyle you can create. There is no limit to the amount of money you can make. There's no limit to the amount of relationships you can create with people who will elevate you even more. So that goes back to, again, locus of control. How bad have you been beaten down by family, friends, society? Like how much of a toll has that taken on you that you don't believe you can overcome it? And I personally believe that there is no power out there. There is no negative influence out there that's stronger than my will to succeed. And so when your will, your belief in your will that you can succeed is great enough, all of that will flow. Abundance will happen. It will be inevitable. So that answers question number two. Hopefully that gave you a little bit of insight into the way I think, and I know others think that are successful as well. Question three. Haru, can you talk about buying condos as investment properties versus houses out of state? In-state, out-of-state. Okay, let's just talk about that. In-state and out-of-state has different challenges, right? Proximity makes a difference. Knowledge of a particular area makes a difference. So let's just talk about in-state, out-of-state first. There are challenges of, like I said, not knowing the history and the direction of a property out of state. So that means there's more intensive research that has to be done because you're not familiar with the history, the culture, the norms, the way government, local government works, the way the people react in a certain place. So there's extensive study you have to do out of state that makes it a little more different than in-state. My philosophy is only invest in what you know. So that means it takes a little extra time sometimes to invest out of state. That's a challenge. Another challenge, again, in terms of proximity, is management. And I'm not suggesting you should manage your own properties when you're home. That's, to me, a job, right? And I don't believe in taking on an extra job. However, it is easier to monitor the management of your properties when it is closer to home than when it is in another state. Because how many trips are you going to make out of state to make sure things are being monitored well? So you might have to have cameras to make sure things are going the way you planned. You might have to have a closer relationship with your tenants to get feedback about the management to make sure things are being done well. So management is an issue. Knowledge of the place is an issue. There's issues with proximity. So there's that challenge. Then a house versus a condo, or commercial property versus a condo, really is dependent upon what the demographic that you're choosing to rent to or to sell to is looking for, right? So it doesn't matter if it's a condo. I've bought condos before. I actually started off, I started with a house, but then as investment properties, I started off with 3 condos. And I was able to flip them quickly in Manhattan, where, or 72nd Street, where it's difficult to find a home. But there's a demographic that is looking for condominiums in a high-rise building. So really, it depends on what you're trying to accomplish, what the demographics are, where you're trying to invest, what they're looking for, right? So most families or startup families aren't looking necessarily for a condo. Older people looking for a condo. Single people who are well-to-do look for condos. Jet setters look for condos. So it depends on where you're at. Depends on what you want to do with it. You might look at a condo in another state as an Airbnb or vacation rental property. So again, the type of real estate that you choose is really dependent on what your desired outcome is and what the market presents itself to be to you. You shouldn't say, I'm just going to do condos or I'm just going to do this, unless you've done your market research, and that's what will get you the outcome that you're looking for. So hopefully that gave you some insight into that. Let's look at another question. Can you talk about index investments? Okay, so usually when we talk about an index or indices, plural, I got fancy on you. An index is a standard measure. So when we talk about an index fund, for instance, in terms of mutual funds as an investment, you're talking about a fund that only invests in the S&P 500 stocks, which is an index of how well the entire stock market will perform. So for long-term investments, people try to beat the indices, right? So they try to beat an index fund. So a lot of people who do long-term investment will just park their money in an index fund and get a steady return. It's not a high return, usually less than 5%, but that 5% will be consistent over 15, 20 years. And so, again, it's a relatively risk-adverse way to park money for a long period of time, where you get a steady return, but you will not get a high return, again, because of the risk is low. So in general, like when you talk about an index, again, like an index fund, it can be an S&P 500. Index gold fund is, similar to that. So that's that. Okay, let's see if we can do maybe one more question, and then Hmm. How can we take advantage of all this confusion in the market? Well, I'm not sure which market is being referred to and what confusion. There's only confusion when you don't know what's going on. Um, so, how do we take advantage of any shifts or turns or turmoil? Within any turmoil, there's always opportunity. In any change, there's always opportunity. So if you're talking about the turmoil in the stock market, what's the turmoil? Are you talking about the threat of, uh, well, which is gone now, the threat that interest rates will be raised? You could have taken advantage of that, but now they're saying interest rates will probably be cut. So how do you take advantage of that? Borrow money, right? When interest rates are low, you borrow money. When interest rates are high, you save or lend money. Um, how do we take advantage of the volatility of the stock markets? You might play options, right? Some people do well with options, and so you can kind of see, you kind of win or lose if it goes up or down. Um, but I think, being conscious of what's going on and studying the market, you'll always see what opportunity arises from every crisis that occurs. So don't be frightened by any changes because changes occur. Pay attention, and you'll see the opportunity that emerges from whatever crisis or turmoil that you believe exists in the market. So I still have a bunch of questions I haven't answered, but please send the questions in. I love answering the questions for you, and I will see you next Tuesday.